Let's take a look at the earnings segment and let's talk about Bajaj Finance. Let's take a look at what the numbers are. And net interest income is coming at 10,277 crores. Our estimate was 10,244. Slight beat on this front. The numbers are looking good because we're seeing a beat coming in across the board. You have net operating profit, that's PPOP, coming in at 8,487 crores. We were expecting 8,420, slight above on that front as well. Net profit has done very well for itself. It's an uptick of 20% coming in on a year-on-year basis, almost at 4,700 crores. Once again, a beat versus our estimates. What is looking slightly concerning for me right now is the GNPA and NNP number that we're seeing on a sequential basis. Slight deterioration on that front. Loan losses and provisions have increased by 26%, so that's a provision uptick coming in over there as well. The total AUM growth is roughly 25%, but 2 and 3 wheeler AUM was down 20%. Lots of pros and cons coming in for Bajaj Finance. Let's connect with Mr. Gaurang Shah, a Senior Vice President at Deteriorates Investments, to understand a little bit more about the earnings fine print on Bajaj Finance. And Gaurang, hi, thanks so much for joining us. What's your first take right off the bat for Bajaj Finance? Because operationally it seems strong, but the asset quality could be slightly concerning.
Thanks so much. Hi, and good evening to all of you all. So, firstly, a prudent disclosure. Our research fundamental team has a positive call on Bajaj Finance from a long-term point of view. The numbers as far as the top line and the bottom line is concerned, I think it is slight above the estimates that were put down. Slight bit of inch up on the asset quality. I guess the verbatim should soothe sentiments over there. And in terms of disbursement, as far as smaller vehicle loans is concerned, I don't think that should be a major concern because good monsoon should have an uptick in terms of demand for two-wheelers, three-wheelers, as well as utility vehicles as we go into the future. And my sense is that post this management commentary in terms of the business outlook going forward, according to us, the credit demand should pick up for banks, private, public, as well as strong NBFCs like Bajaj Finance, and that should help the loan book growth into the future. Only thing is cost of borrowing and lending is something that we need to know from the management.
Okay, well, yes, all eyes are going to be on the management commentary on cost of lending, borrowing, and the impact, of course, of the RBI rate cut that we have seen. But Gaurang, any estimate on what the impact could be in terms of their cost of borrowing? Now, you said that all eyes are going to be there, but given the RBI bazooka we've seen this time around, what impact could it have on Bajaj Finance as well as the overall NBFC sector?
So I think, regulations as far as unsecured credit is concerned, RBI was very vocal about it, that they don't want it to balloon out of control, wherein it could have a domino effect on various other, sectors and have a counter effect as well as on the competitive NBFCs. So I think it's a prudent step from the RBI and, you need to be careful. The good part is that some of the NBFCs, including small payment banks, their ticket size as far as loan is concerned is pretty small, and the run rate in terms of recovery of principal and interest is very, very high. For Bajaj Finance, like I said, I think lower interest rates should augur well in terms of cost of borrowing, but at the same time, margin spread in terms of lending should also be kept in mind.
Lots to watch out for on this front. And before we let you go, Gaurang, just want to understand the provisioning that has been done by the company this time around. It's down almost 9% sequentially, but it's still an uptick of about 26% on a year-on-year basis. It's coming at 2,120 crores compared to 1,685 this time last year. This is a loan losses and provisioning figure. Gaurang, any take on this?
I think this is a number which should possibly have a little bit of eyebrows getting raised. But like I said, I think whether this is going to be a sequential quarter-on-quarter impact going forward, whether it's going to be reduced, I think that should be very important to listen into. So I think we'll have to wait for the management commentary over here.
Okay, well, that's the take on Bajaj Finance's numbers. On that note, Gaurang, we'll let you go. And before we wrap it up on this earnings edition, just what to look forward for next. We're going to be playing a very special episode of ET Now Insights, so you stay tuned to ET Now.